Morning, everybody. I think it's time to roll. Welcome to our fifth webinar in the Retaining Businesses During the Pandemic webinar series. And I want to thank everyone for coming. I don't know how many people are here, but we had about 157 registered as of this morning. So thanks for getting up early and thinking about the Minnesota economy with us. So like I said, this is our fifth event. We'll spend about 20 minutes in discussion between Brigid Tuck and Laura Kalambokidis. And then we'll spend some time on Q&A. We'll have a stop at 9:30, and if Laura has a little bit of additional time, we can spend a little bit more time with more Q&A. But we promised that it's a half-an-hour event. We will record the event as we do with all of them, and they are available at our website, which you'll see at the end. I'll put that screen back up. So please take the evaluation at the end, because we do get good ideas for what our future topics you'd like to see. We have a lot of smart people at the U and in the state, and we're kind of sharing between university experts and outside experts in this series, and we try to make them conversations. So with that, I'm going to introduce Brigid Tuck, who was our first webinar speaker back in April. She's our senior economic impact analyst for Extension, and then Dr. Laura Kalambokidis, who is our state economist, who also is a professor in the Department of Applied Economics at the University of Minnesota. So with that, I'll throw it over to Brigid and Laura.
All right. Well, good morning. Welcome, everybody. Very excited for my opportunity to interview the state economist. It's kind of like a dream come true for Brigid. So thanks, Laura, for agreeing to do this. As Michael mentioned, Laura is our state economist. She is also in applied economics, but also has an extension appointment and has actually done some national extension work, developed a program on public value. So she is no stranger to our Minnesota communities and to the needs that happen at that community level. So great presenter today to kind of talk about what's happening nationally, but then bringing it kind of down to our community levels. So I will have a bunch of questions here. As Michael mentioned, we will have time for Q&A. So I encourage you, as we're talking, feel free to type things in the chat, and we'll monitor that and pick up questions there as we go along as well. So with that, Laura, let's maybe start. I like to start at the big picture level. Can you tell us kind of what's happening at the national level? And then with that, I know there's a lot of uncertainty. What parts of the economy maybe are most uncertain, or when you're looking at the forecast, where is that uncertainty coming from?
Yeah, great. Thanks, Brigid. And Michael, if you want to just go ahead to the first slide. I'm also really pleased to be here. And one of the reasons, as Brigid said, that it's useful to start with the U.S. economic outlook before I move to Minnesota, and that's what I'm going to do. We'll talk a little bit about the U.S. and then to Minnesota, is because Minnesota's economy is very closely tied to the U.S. economy. We have a diverse industry base that has a similar profile to the United States, and so we tend to follow the U.S. economic outlook. And another reason why it's important is because when my office does the forecast for the state of Minnesota and for tax revenues for Minnesota, we start with information from a U.S. economic forecast. We don't forecast the U.S. ourselves. We forecast Minnesota. And so I'm going to show you what it is that we have been working with as we prepared the interim budget projection that we released a couple weeks ago. So this first chart shows U.S. real GDP, so U.S. Economic activity. And the dark line shows the history, and it shows the April forecast by IHS Markit, which is the macroeconomic consulting firm that we use. And then the dotted line shows their February forecast. And the reason I'm showing February is because the last time we released a forecast was in February. The last time Minnesota produced a forecast was in February. So in February, that dotted line, that's the path we thought we were going to be on. And there were risks at the time. We knew that COVID was beginning to be a thing. And so in our presentations and our documentation, we said, one of the risks to this outlook is that the pandemic that the virus becomes a pandemic and becomes more widespread and of longer duration. And indeed, of course, that is what happened. So the outbreak of COVID-19 and the measures taken to prevent its spread dramatically weakened the US economic outlook compared to what we had in February. And so in April, IHS was forecasting a minus 5.4% growth, so 5.4% contraction this year. And so that's what that dip down is. IHS then expects a recovery. So what they noted that their outlook depends critically on the path of the pandemic, and they expect the spread of COVID-19 to peak and then dissipate soon, so in early summer, allowing social distancing restrictions to be lifted in late summer or early fall. And then economic recovery begins at the end of the year. So you can see 3 quarters, and that the data points in this chart quarters, 3 quarters of negative growth or down, pointing down, and then it starts to pick back up, and we have growth next year, annual growth about 6.3% next year. But note that we don't get back to that dotted line. So in this outlook, we get back to the level that we had been prior to the pandemic sometime in the middle of next year. So you can see the black line that comes up in 2021. It does get to where we were when the pandemic started, but we never get back up to that dotted line. So some amount of economic activity is simply lost, and we don't get back onto the path that we were on. If you turn to the next chart, this is a really similar picture, and this one shows consumer spending, real consumer spending. So real consumer spending accounts for 2/3 of real GDP. So it's a big part of GDP, and consumer spending was the driver of the economic expansion, that historic expansion that we were in until this recession hit. And so consumers are a big part of this. We're a big part of the expansion and are a big part of what is happening to the economy right now. So this collapse in consumer spending, this is a 5.3%, or I'm sorry, 5.5% decline in consumer spending, and it has a similar path back up as real GDP, but it never gets back to that path that we were on. And so what's happened, why is consumer spending contracting as much as it is? Well, there's the social distancing that is keeping people from being able to spend on some things that they normally would, but it's also increased unemployment and subsequently declining wages and salaries and volatility in the stock market. So the way the stock market plays in here is that when people feel wealthier, there's a positive wealth effect to consumer spending. They spend more, and that's something that helped drive consumer spending during the economic expansion that we were in. But when people are less wealthy, so for instance, when equity prices fall or when home prices fall, then they tend to spend less. There's a negative wealth effect. And so that negative wealth effect is playing a role here. Another reason I wanted to show you the consumer spending graph is because this is something that influences our tax forecast, because it influences sales tax receipts for Minnesota. And many of you, maybe you're in localities that have a local option sales tax. And so with consumer spending down, your sales tax receipts are likely to be down as well. And it's what's affecting businesses, especially retail businesses throughout Minnesota. There's been this huge contraction in what the money that consumers are putting out into the economy. And a lot of businesses are feeling that. So Brigid, let me talk about some of the other risks in addition to that consumer spending. So in order for the recovery to pick back up, is consumers have to feel confident that they can spend. And so they need the means to spend. So income has to come back up, and they have to feel safe getting out and doing the activities that they were doing before, going to restaurants, traveling, those kinds of things. So the shape of the recovery depends more on how people behave than it does on what governments do. So specifically the pace and timing of government restrictions and the lifting. of those restrictions. It matters more how people and businesses react. So business confidence and consumer confidence are a big risk here. There's I said IHS for the U.S. outlook. IHS said that their economic outlook depends critically on the path of the pandemic. They acknowledge that there could be other paths of the pandemic than what they have identified as what they think is the most likely thing at this point, and things will change as time goes on. Their May outlook, for instance, has a larger contraction than the April outlook that we used. And as the pandemic changes and as their understanding of the pandemic changes, the US economic outlook is going to change as well. Financial market volatility, I talked about that, the role of that. All of the federal support that's been put in place so far has been incorporated into the US outlook that I'm presenting. But we don't know exactly what's going to happen next in terms of federal support. We also don't know exactly what the impact is of the federal support and the monetary policy support that's already happened. And then one risk that is more specific to our revenue forecast, which is what informed that interim budget budget projection that we released a couple weeks ago, is that we have these delays in tax payments right now, where you didn't have to pay your income taxes on April 15th. You can pay them in July. There's some delays to sales taxes, and that delays also the signals that we usually get and we use to identify what's going on in Minnesota's economy. So there's a lot more muddiness to the signaling than usual. I can talk a little bit more about unemployment, unless Brigid, you have something else you want to throw in.
You answered this, but it came up in the chat that this sort of envisions, it doesn't look at a second wave of potential outbreak, correct? This is just saying right. It eases come the end of summer and we kind of head back towards normal. Okay. Right.
And so that I would identify as one of the risks. So Michael, if you can go back to the slide prior that has GDP on it. This is sort of the shape of the recovery. It's this U, and there's no second dip later in the year. IHS has run lots of other scenarios, including a W-shaped recovery where there is a later dip. As the pandemic changes, their outlook will change. And so the shape of the recovery is one of the risks to this, is that, they put forward as their baseline the forecast that they think is the most likely, and they assign a subjective probability to that. Say we think it's X% likely that this is going to happen. They assign a relatively low probability to their baseline outlook because there's so much uncertainty in this forecast, and their forecasts are changing more month to month than they usually do.
Right. Making it all the much harder for everyone to plan.
Yes, exactly.
So there were two more questions in the chat that I think fit here.
Yep.
So looking at like restaurants and taverns, so does this sort of assume that they are back at 100%? I mean, I think that fits in with that relaxation. When you said this assumes relaxation of social distancing in the fall, I would assume that puts them back more at full capacity by late summer, early fall.
Yeah, probably. It's the US economic outlook doesn't incorporate that level of detail. But yes, they are, as I said, they're thinking about what governments are doing in terms of relaxing restrictions. But then when restrictions get relaxed, they don't assume an immediate jump to normality. There's a ramp up in activity as people and businesses figure out how to act and how to keep people safe and open under safe circumstances. So so the relaxing restrictions happens later in the summer and early fall, and we get back to growth, positive growth later in the year.
Okay, and then one more question that I think is kind of interesting. So pointed out that GDP seems to be growing at roughly the same rate as projected growth from February, but consumer spending is a little more flat. If you look at the two charts. That could be bit more.
GDP, okay, maybe, I'm not sure, maybe I don't understand the question. So go back to the GDP chart. So this is not growth rate. This is level. Usually when I present the forecast, I'm showing growth rates. This is the level of GDP. It's an index level. And so it is, I see what you're saying. So they're saying when we get out to 22 and 23 and we get back to growth. Yes, that's right. It looks like GDP is growing a little faster than it was in February, and then the curve flattens a bit and it gets a little slower. That's right. And then when you get to consumer spending, go back to that chart. Yeah, that's right. So that flattens out more. What does that have to do with? I believe that has to do partly with IHS's expectations for the stock market and the wealth effect and for home prices, so that they're expecting not as strong growth in wealth as they had been expecting in February, and that dampens consumer spending. But that's an important point for those of you whose businesses and communities are depending on consumers getting out and spending, is that even when we get back to recovery, it's slower growth in consumer spending than what we had expected before. That's an interesting point. Mm-hmm.
Oh, awesome. Thank you, Laura.
Yeah.
So let's move to Minnesota. Tell us a little bit about how this uncertainty is playing out for our state. And
absolutely. So if you go to slide 4, this is going to still be the US, but then I'll quickly move to Minnesota. So this is unemployment insurance claims for the United States. So this is one of the things that happened as we had this hard stop to economic activity, this really dramatic shutdown due to the measures, due to the pandemic and the measures to slow the spread. And so this shows seasonally adjusted initial claims for unemployment insurance. So when people become unemployed, they apply for unemployment insurance by week. So the weeks ending in the dates on the horizontal axis. And this is this year. And so we had this really very, steady number of unemployment claims by week up until the middle of March. And then the number of claims in millions jumped to 3 million. And this was just a really dramatic change in unemployment insurance claims. And then it doubled the week later. And then it stayed at 6.6. And so we now have about 26 million people in the United States on unemployment insurance benefits. And that is just a dramatic picture. And it's one of the few pieces of economic information that was in real time. So something we could see happening as other economic data were lagging. And so when we were preparing our interim budget projection, we knew that this dramatic thing was happening at the US level. And then Michael, if you go to the next slide, I can show you what happened in Minnesota. So this is the same number, but it's initial and claims for unemployment benefits in Minnesota. So let's start with the blue line. So the blue line at the bottom, that's the 2019 weekly unemployment claims. So this is what it looked like last year. And we've been saying throughout this economic recovery and expansion prior to the pandemic, Minnesota had very low unemployment. And so our unemployment claims were just hanging down at the bottom, not in a worrisome way at all. And then so we decided to compare that to what it looked like during the Great Recession. So if you move to the red line, this is what a recession looks like for unemployment insurance claims. And so it's a solid amount above the blue line. And if we didn't have the green line in there, that would look like a really big jump, which it was. It was a big jump. So this was weekly claims. It's not cumulative. It's just weekly claims during 2009. Now look at the green line. This is 2020. So if you go back to the left-hand side of the graph and start with week 1, the green line is tracking what happened in 2019. So we had pretty much the same kind of year, not a lot of activity in unemployment insurance claims. Our unemployment rate was low. Then you get to the middle of March and we have this dramatic spike up. And everybody saw that happen. That got announced, and it was really something that we had never seen before. That's about 115,000 claims that week. And then the following week, we have a level that's just as high, almost just as high. And then the following week, another one that's almost as high. And then it comes down, but it's still much higher than what we had for weekly claims a year ago. So at the moment, so since March 16th, about 690,000 claims. We've had about that many claims in Minnesota. That's a lot of lost jobs. Now, this, as I said, this is real-time data, and so it helped us understand what was actually going on in Minnesota's economy, but it's different than what we usually think of as unemployment insurance claims, because this time mixed in there are self-employed people, because during this crisis, people who are self-employed can apply for unemployment insurance, and Minnesota implemented that sooner than many other states. It also includes people who have had their hours cut significantly because of the pandemic. And so they may still be working, but their hours are cut and they can get some claims for that. So that you can't draw a direct map from this to the unemployment rate in Minnesota. So we saw this was going on. And if you turn to the next slide, you can see our forecast for Minnesota wage and salary income. So here, the height of the bars here is the growth rate in total Minnesota wage and salary income. So that means you add up all of the payrolls of all of the employers in the state of Minnesota. That's total wage and salary income. And then you look at how that grew over the course of a year. So the dark bars show the history in growth in wage and salary income in Minnesota. And then the striped bars at the end show our forecast for wage and salary income. So that dramatic increase in unemployment insurance claims feeds into our forecast of lower wage and salary income growth. And that lowered our forecast for both income tax growth and sales tax. Brigid, do you want to, I can drill down more into some differential effects across the economy, or do you have questions you want to jump in with now?
No, I think this is good. We are at 9:22, and 9:30 we should be wrapping up with the formal part of this. So I will let you just kind of keep going because this is fascinating. So
okay. So if you go to the next slide, this is a recent quote by the chairman of the board of governors of the Fed, that the burden of this, we have all been affected. So there is no part of the state that has been untouched by the pandemic, and there's no industry that's been untouched. There's no occupation. There's no family that's been untouched. So we're all affected, but the burden has fallen most heavily on those least able to bear it, which is true. Often true with economic downturns. So if you turn to the next slide, we drilled down in those unemployment insurance claims to see what those differential effects might have looked like. And so these are unemployment insurance claims in Minnesota since March 16th. And DEED has the data on their website to show what occupation people were in when they filed for these claims. And so you can see we've distributed the number of claims across occupation groups. These aren't industry groups. There's no easy crosswalk between occupations and industries. But obviously the first one, the highest bar, about 100,000 claims there, is food preparation and service related. And then so all those restaurants, all those bars in your towns, those places are really, really lost a lot of workers, at least put them on furlough. And then sales related, and then office administrative support, production. So there's some manufacturing people that got laid off. That's the next one. And then one of the bars that we saw right away, lots of people noted right away, is with the first bit of information about these claims in Minnesota, is how many healthcare workers were in there. And I don't know that I expected that, because it's a healthcare crisis, so we need healthcare workers. But with the stoppage on non-emergency care, a lot of healthcare workers went on unemployment insurance. And then there's also construction there as well. So it's differential impact on these people in food prep, in sales, in personal care. And if you go to the next slide, we created when I say we, I mean my staff at Minnesota Management and Budget in the Economic Analysis Unit. We looked at those initial claims by occupation, and then we looked at DEED's data on the median wages per for each occupation. And then distributed those to look at by quintile, from lowest quintile to top quintile. So looking at where is the burden, who's really being impacted here. And so 38% of those UI claims for Minnesota since the middle of March have been in occupations that have the lowest median wages. That's the dark blue pie bar. And then 23% have been in that second quintile. So indeed, there's been a differential effect. A lot of people whose jobs can be done at home are continuing to do them, and their salaries have stayed the same, and their hours have stayed the same, and their benefits have stayed the same. But in many of your communities, I'm sure you're seeing that it's people in the lowest wage earning categories, not exclusively, of course. You can see there's impact in all of the quintiles, but that's where the burden is really being felt. So that's the end of my prepared remarks. So we can go to more questions.
Yeah, so just one question on that unemployment information. Is there a wage cap on unemployment that might affect how this pie chart works out? I'm not aware that there is one, but.
I don't have an answer to that. A wage cap meaning if you.
Like there wouldn't be people in the high income because they can't qualify for unemployment, I think is.
I don't think that's the case. I mean, that if it has to do with number, you've lost wages because your hours are lower, you have to have lost a certain percentage of income in order to be able to apply, but I don't know that there's a cap. I mean, if you're a high wage earner and you lost your job, you can apply for unemployment as far as I know.
Okay. All right, we'll let people comment on that in the chat if they have better information. So
Ron, I see that Ronnie just answered.
Yeah, there's an hourly
cap. Okay.
So I guess a question, or one, just kind of a comment that to go into what you were talking about here, Laura. We did some work with the Duluth looking at the workforce, kind of taking what was happening and then trying to drill it down a little bit more. And we found, like, for example, with the healthcare workers in Duluth, something like, depending on which healthcare industry you're in exactly, occupation you're in, something between like 75 to 90% of those folks were women filling those positions. And we did some work with Staples and Wadena and found that there's a large percent that are in the in the food preparation area that are younger workers. So just, you kind of highlighted income here, but there are really some stark differences too in terms of gender and age distribution as well happening out there across the state, I think.
Yeah, yes, that's right. I think, this is I've been saying to some of my staff that this is going to be the event that spawns 1,000 doctoral dissertations and or 1 million maybe. And so looking at those differentials is going to be important. Regional, gender, race, age. Yeah.
And I think it really helps us inform, as practitioners, which we have a lot of practitioners on today, helps inform how do you make that strategy to respond to that? Because it might look very different for younger people than it might look for an older population,
Yeah.
Some differences.
Yeah, and as people are developing response strategies, keeping those differentials in mind, and also keeping in mind that nobody was untouched. So even if you're in a relatively secure position, you're still feeling the economic impact and the stress of this event.
Absolutely. All right, so go ahead, Michael.
Oh, yeah, well, this is just our half an hour moment. So, we do promise that these webinars are half an hour, but we will certainly keep this going for another 15 minutes if Laura and Brigid have the time. I will go and fetch the evaluation and send it out to people. But yeah, Nancy, we'll share these slides and we'll send out the evaluation. But we'll just keep going here. But those of you who have to take off, this is the half hour point.
Yeah, thanks, Michael.
Yeah.
So there's a question here, Laura. Are there any estimates on the gig workers and how are they accounted for in these projections?
Yeah, I don't have specific information on that yet. But it depends on which data set you're looking at. So at the moment, we've got the wage slide up here, total wage and salaries. If you're a gig worker and you're self-employed, you're an independent contractor and you're filing taxes as a business, then you're not in our wage and salary disbursements projection. But we do project that that line of income when we do the income tax forecast. And I can talk more about this wage and salary projections. I saw there's a question about that. But in terms of unemployment, it's new. It's under this particular crisis that self-employed workers can apply for unemployment insurance benefits. And so that effect has altered the comparability of the unemployment insurance benefits now to the historical time series. And so that's one of the reasons you can't do a direct crosswalk between unemployment insurance benefits and the official unemployment rate, because gig workers who are in a position to have applied for unemployment insurance benefits are in those unemployment insurance benefits numbers and may or may not be in the official unemployment rate numbers. I think we just had the unemployment rate come out, or it's coming out shortly. Well, actually, I think it's not out yet. But in any event, actually, there was a question about this slide, the wage and salary.
Yes. Yep.
About the 0.3% in the next year. Yeah, it's not, our current forecast has us recovering to growth in total payrolls next year, but employment and particularly wages stay dampened. So we don't get, in our forecast, particularly strong growth next year. We don't get back to pre-pandemic levels of wage and salary income until 22 in our forecast. And let me just also reiterate all of those uncertainties about this forecast at this time. So was an unusual time for us to do a projection. We normally do our forecasts February and November, and we've never done one any other time. But because economic conditions had changed so much, we updated our projection and released a new budget projection a couple of weeks ago. But with less data than we normally have and under very uncertain conditions.
Do you anticipate then that you might do another one here, or is that the legislature sort of has what they need for now and they'll go forward?
I think so. We will do what we need to do to help the legislature and the governor make the decisions they need to make. But we don't have a timeline for another doing an updated projection. We won't know much more about Minnesota's situation until late in the summer, because now I'm moving to thinking about revenues. We have to wait. Here are the things that I want to wait for to do more projecting. I want to wait for those revenue delays to play themselves out so that we actually know what sales tax receipts are and what income tax receipts for tax year 19 were. I want to see the U.S. economic outlook stabilize. Right now, the U.S. economic outlook is still pretty volatile. And so I don't want, it doesn't help to have sort of a roller coaster of projections. And I want to see how this spike in unemployment insurance benefits plays through the economy into our income tax withholding receipts. And that hasn't quite happened yet. So we need more time to look at income tax withholding to see how this unemployment is affecting income tax receipts. So what I mean by that is this differential impact across wages is something that is new for an economic crisis like this. And it's something that our models are not particularly well equipped to deal with. And so we need some real-time Minnesota-specific data on income tax receipts before we can say what we really think is going on here.
So kind of getting into that a little bit with the income tax question, I kind of, in my mind, think about this as there are some industries where, for example, I have a friend that's a dental hygienist, right? The dental shop closed down. She very smartly filed for unemployment to cover those 13 weeks or whatever while the shop was closed. They're reopening. She'll go back to kind of work. And so long term, maybe there wasn't a whole, I mean, it was very stressful and all the other stuff that goes with that, but maybe long term, this won't have as much of a long-term impact on her personal finances, as opposed to someone who finds themselves out of work permanently. What are you kind of seeing or thinking about sort of how this is impacting different industries in different ways? Or do we think those unemployment claims will really come back down to maybe more closer to those 2009 levels once things get to kind of reopen and get back to function?
Yeah, well, certainly as restrictions are lifted and people feel safe going out and doing their economic activity, and businesses have figured out ways to open safely, we do expect recovery to happen. But think about that, the dental hygienist situation and salons, bars, there are a lot more costs involved in running those businesses than there were prior to the pandemic. So all of the dental hygienists are in full PPE, and it takes longer to go take care of a patient. And so you probably have fewer patients per day. And that's going to be true for salons. It's going to be true for restaurants. It's true in manufacturing. A lot of costs have increased. And so, so one aspect of that is business survival. So as costs increase, margins get shrunk. And so not all of the people who have been laid off are going to have an employer to go back to. So that's one of the reasons it's not just flipping a switch and we're back to normal, because I don't think we know yet what normal looks like in the retail environment, in the healthcare environment, in manufacturing, in tourism for sure. So, a lot of these companies that have laid people off, their business model has been disrupted, and they have to figure out what the new business model looks like. And it might look like fewer people working or costs increasing.
Hey, Laura, can I jump in there with a related business retention question? Because, this is the business, retaining businesses is one of our overall concerns. In terms of churn of establishments, I mean, we're all going to continue to need haircuts. I need one. We're going to need to go out to restaurants and go to church and do all these things when we get back to more normal and all that. But in terms of churn and numbers of establishments, one of the questions earlier was kind of getting at how many restaurants, won't make it. And of course, other people will come in. And any comments about kind of the retaining businesses aspect of this? I know you've helped us with our BR&E program as long as you've been in extension. So I know you take an interest in that. But any thoughts along the retaining businesses question per se?
Yeah, if I were a local economic development official in this crisis, I would be trying to figure out who among my community businesses has access to credit and can cash flow their way through this crisis, and who doesn't have access to credit and why. And I would be concerned about businesses that have particularly low margins. Restaurants tend to have relatively low margins. So, I might try to get personal with some of my community businesses and, ask, what was your margin before? How long can you withstand? How long can you make it here? What kind of credit options do you have? And target efforts toward businesses that really can't figure out or don't have access to short-term borrowing that they might need. Businesses that are struggling with costs like rent, and you try to target that. So I would need to know something about the financials of the businesses in my community in order to get a better idea of who's likely to be able to survive this and who's at risk.
Great. Time for a few more questions.
Oh, yeah, I was just saying that there's a few questions in the chat that are mostly related to sort of how does Deed do unemployment numbers? And I know we're not experts in that. So Michael, perhaps this indicates we could consider having someone from Deed's labor market team come and talk unemployment statistics with us sometime. So I see those that are ignoring you, but I don't know that we have the answers. But Laura, I thought we'd just maybe end on, you know, there's a lot of fear and uncertainty out there right now, but I always like to think that our Minnesota communities are fantastic places to live and work and play. So what, as you look at this, what are maybe some signs of hope or some positive signs that you see for Minnesota here as we go forward?
Yeah, that's a great question. And I would, I'd actually tag onto a bit to my answer to Michael's question that, you know, you've got the local communities, local economic development officials, chamber groups, they've got this immediate crisis and they're, you know, trying to retain the businesses that they have right now. But also for the long run, investing in those long-term assets that make the community great. And I know the business retention and retention and expansion program, the surveys that come out of that program help communities identify what are the things that businesses value about this community. And so while you're fighting the fire on one hand, thinking about those assets, we still have those assets, how can we continue to invest in them? And those are things that, you know, statewide, those are things like a diverse economic base, an educated, hardworking workforce, natural resource amenities, educational systems, healthcare systems, and then each community has their, has their own specific assets. Another thing that gives me some hope here is that while no industry has been untouched by the pandemic, a lot of jobs are still intact, and they've been disrupted, but a lot of people are going to be able to keep their jobs and keep their income and their benefits. And so taking some time here to think about what that new normal is going to look like and what we want it to look like. How can we innovate? What can we learn from this crisis that will help Minnesota communities thrive in the future? Are there things that we've learned about distance work and distance learning and the need for transportation infrastructure, the need for healthcare infrastructure? So taking I'm hopeful about this being an opportunity for communities in Minnesota to take some time to be creative about shaping their future in whatever this new normal becomes.
Well, I think that's a good way to go out. How Brigid?
Yes, that's what I was just going to say, Michael. I think that's it.
Well, thank you so much, Laura Kalambokidis and Brigid Tuck. And those of you who attended, I will be sending the evaluation. I thought I had it queued up, and apparently I didn't, but I will send that and Laura's slides out by email. We do have another event coming next week, which is about a small town bank in Osakis, and that's gonna be an interesting discussion between Didi Lemire and this banker about a bank working on community psychology and trying to help its community of businesses get through this pandemic along with the rest of the community. So the series continues. Please send us your ideas. We just got one. Maybe I'll be calling Cameron Mocht about maybe getting him or one of his people on from the labor market analysis team. But we're going to keep this going because that's part of Extension's duty is to give practical information and practical knowledge and convene people. And I think we're learning from each other as much as as from the people who are on the stage. So thanks everyone. We'll be in touch and continue to take care of yourself and your loved ones.